Hi everyone, today we're going to cover why cash is king in construction and discover the future of cash flow forecasting. So to begin, I think we've all heard the phrase before, cash is king. We've probably heard it so many times that we take it for granted, but I think it's important to take a step back and consider why is it important. And I think one of the best illustrations is this chart we have pulled up on the screen right here. Basically what it's giving us, it is a overview of the project's financial timeline, where we're looking at the build amount on the project versus the cash received versus the cost on the project. And the first thing that jumps out to us is we can see this is an extremely healthy project. Our total build amount is almost $4 million on the project, while our costs are only about 2.7 million. So that's over $1 million in profit, an extremely healthy margin on the job. Yet, despite how healthy this project is, we can see some of the challenges that we face from a cash flow standpoint. The first cost we experienced on the project were in August 2021, but we weren't cash flow positive until it looks like maybe June, realistically, probably July 2022. So almost a full year later from when we experienced the first cost on the project until when our cash received actually exceeded the cost. And this is kind of the nature of construction, right? There's always going to be that delay from when you experience the cost to when you get paid for those costs. And ensuring you have a good process in place to manage that delay is essential to make sure you have enough cash on hand to fund your operations and to make sure that materials still hitting job site, you're still making your payroll payments and all the other obligations that you have as a company. So why is it so challenging in construction to really have that strong cash flow? And there's a lot of reasons that we can get into why cash flow might be difficult for contractors. But I think there's three main ones that are really worth getting into: unpredictable payments, slow payments, and retainage. So let's take that first one first, the unpredictable payments. I'm sure all of you have payment terms in your contract. I think a lot of contractors experience, though, that even with those terms in the contract, the payment might kind of vary greatly based on when you might actually get paid, right? It's that paid when paid terminology we see in so often in construction contracts, that you're not going to get paid until your client gets paid, and they're not going to get paid until their client gets paid. And it's kind of low man down on the totem pole, that can really delay your payments, and not only delay your payments, but make it really hard to predict when that cash will actually come into the door. And that brings us to the second issue, right? It is the slow payments. And I think this can really create a challenge when you're doing your cash flow forecast. I think we all like to think, hey, we're going to get paid within 30 days. I think the reality is often very different from that. Often we see it takes 45 to 60 days to get paid once you've submitted your billing. And that's only once you've submitted your billing. So that's not even taking into account the delta between when you might actually experience the cost on the job site to when you can actually submit your monthly payout. So, it might be 45, 60 days, but realistically, it might be even longer than that from when you experience your cost to when you actually receive the cash in hand. And then the final one is retainage. I think it's one of the more unique things about the construction industry, that right out of the gate, you're putting yourself in a 10% hole on your cash flow, because they're going to hold that payment, that last 10%, until the very end of the job. So that's just one more obstacle that contractors are having to face to make sure that they're staying ahead of the game when it comes to cash flow. All right, well, enough looking at the PowerPoint here. Let's dive into the actual platform and see what tools are at our disposal to actually help us manage that cash flow. And what we're looking at here specifically is a 13-week cash flow forecast. I think this is pretty standard within the construction industry. It's taking all of your cash flow at a company level and really looking at what is your current trial balance to date, and how might that impact and change over the following 13 weeks based on your outstanding AR collections and your outstanding accounts payable. So the first thing we want to look at here is, when we're forecasting our cash flow, is where are we currently today? What is our current trial balance? And what we can see up at the top here, this is going to be our current trial balance. And it's also going to give us the balance of all the individual accounts making up that trial balance. Also shown at the top is what is our line of credit available. So we can see here in this example, we actually have our full 3 million line of credit available to us to use. And how you set this up is if I go into my settings here, I'm going to see a list of all my cash GL accounts and a list of all of my liability accounts. And this is going to come directly from your ERP system. So there's no need to upload this. This is going to pull automatically from your ERP system every night. And you can go in and select what GL accounts you want to include in your cash balance. And then that way it's going to look at all previous transactions and give you that current trial balance to date. Okay, so let's go back to our cash flow forecast page here. And as we mentioned, we've got our current trial balance. So that is going to be my forecasted beginning balance for my first week. So my current balance is $2,451,000. That's going to be my forecasted beginning balance for the first week. And then I'm going to have two buckets of information, my inflows and my outflows. So if I look at my inflows here, what I can see are my AR collections that I have to collect over the next 13 weeks. And again, this is going to pull directly from your ERP system every night. So there's no need to go in and enter these invoices. They're going to populate automatically as long as they're up to date in your ERP system. But what you can do in the system is update your projected payment date. And based on that projected payment date, it's basically going to be when or where that amount filters into the various weeks here. So I can see I'm projecting to receive $356,000 in payments this week. If I want to see specifically what those payments are, I can click on this here and it's going to give me all of the invoices that I anticipate to receive in the week of March 5th. And I can see the amount of each of those invoices I expect to receive and the projected payment date and the project for each of them. If I wanted to update that projected payment date, I could select one of these invoices here and I could enter in a new date. So I'm going to push it out to the 14th. I'm going to say why. Let's say it's a missing paperwork. I can add any comments here. I can save. It's going to tell me any previous adjustments down here. So you can really keep track of all of your payment dates for the various invoices. It's a really good way to make sure you're staying on top of your collections and things kind of slip into the cracks, that you're really making sure you're getting all those payments as quickly as possible. So as I make those adjustments there, if I save this adjustment and I go back to my cash flow forecast, we'll see that AR collections amount changed right here. So the other thing that you can add to your inflow here is you can add other additional items. So let's say it's something you don't have a formal invoice for, but you know that you're going to receive that payment. You can go in here, add an additional item. We'll call this extra money. I can give it a total amount. So let's say it's $25,000 and I'm going to receive it weekly starting today for the next 2 months, so through the end of May. And I save that. And now I can see that I'm projecting that $25,000 for each week. So now when I look at my total inflow for each week, I'm going to see my AR collections plus any of these other items I have to give me what I expect to receive in payment for that week. Now, if I go down to the outflow item, it works the exact same way as the inflow, except it's going to pull your AP invoices rather than your AR invoices. And you're going to have the same thing as before. We have your other section here where you can add any additional items that you might have to pay out. So maybe it's your rent payments, your utilities, anything that you know you pay out on a weekly, monthly basis, you can add it here. One other item that's fixed is payroll. So whether you do payroll weekly or bi-weekly, you can enter what that payroll amount is to make sure that gets picked up in your outflow as well. So once we've adjusted the inflow and the outflow, what we can see here is my net cash flow is basically going to be the delta between that inflow and my outflow amount. So I can see, all right, between $327,000 in my inflow, $81,000 in my outflow, that's going to give me my net cash flow of $246,000. And that will lead me to my forecasted ending balance. So basically my forecasted beginning balance plus my net cash flow for the week gives me my forecasted ending balance. and my forecasted ending balance for the prior week becomes my forecasted beginning balance for the next week. So that gets picked up right up at the top here. And then you go through the same exercise for each week. So this really gives you a way to make sure you're staying on top of your cash flow from a company standpoint, that you're kind of projecting out when are you going to receive payments, when are you going to have to pay things out, to really give you an edge to make sure you're managing your cash flow effectively. So that is a brief overview of how Cronovus can help you manage your cash flow. In addition to the cash flow forecast tool, we have lots of other analytics offerings within our platform that really help contractors make the most out of their data to make informed decisions. So I'd like to thank everyone for joining us today, and I hope you have a good one. Thank you.